Hello everyone, welcome to the Ichimoku Charts.com daily analysis for Euro US dollar FX for Thursday, May the 31st, 2012. Well, a continuation of the trend to the downside today. A candle that's made a lower high and a lower low, but that continuation of the trend was on a doji type candle. A candle with virtually no body, where the open and the close are basically in the same area. The significance of that is that the body is so small that neither side has made any bullish nor bearish progress. If we look at it in contrast to the previous 3 trading days, where we had black bodies, and as the trend was continuing down, the size of the black body was increasing as the sellers were increasing their downside momentum. Today, all of that downside momentum has dried up. The sellers have lost their commitment to taking this trend lower, and does set this market up for a potential change of trend. Now, this is a very indecisive type candle, and not only because of the small body, but because of the shadows on the top and the bottom. So not only have the sellers lost commitment, but the buyers have failed to show any commitment as well, and that's what makes this candle very indecisive. The buyers have failed to take control of this market, so even though there is good potential for that change of trend, we do need confirmation, and confirmation would be the buyers taking out the previous high or today's high. Now, in terms of support and resistance, if this market does rally, then we do have potential resistance at 124.55, which is a previous area of support, and then above there some small potential around this minor swing low around 125, and then up to 125.86. In terms of the current Fibonacci extension, and we're comparing the current downtrend to the previous downtrend in terms of the Fibonacci relationships, and here we once again see the market stalling at that 78.6% level. Previous day we saw the market close at that level. Today we've closed at that level again. We've attempted to trade lower, but the sellers have lost commitment at that level, so there is strong potential for a change of trend based on this Fibonacci level, although that is a minor level too, so we do need to be aware of that. If the trend does continue down, then we do have the 100% extension at 122.95, so that's an important level if the market is going to extend this trend to the downside, but it's not likely at the moment, with the sellers failing to support the trend to the downside any longer. In terms of the Fibonacci retracement, and we're looking at the relationship of the current downtrend to the previous uptrend, and the market has traded through the 161.8% level that we saw, and is capitulating here between the 161.8 and the 261.8, so no areas here that the market is holding up at, but we have the 261.8% level as mentioned yesterday at 122.89, which coincides with the Fibonacci extension number. So if the market does continue trending down, then that's certainly an area where we could see the market hold up. In terms of Ichimoku, the market is bearish in all 3 timeframes. We're trading below the cloud, below the Kijun-sen and the Tenkan-sen. The Chikou span is below the corresponding price action, so it's confirming the negativity that we're seeing in the market. As I've mentioned previously, this market is looking a little bit overextended. We are trading a long way away from the Tenkan-sen, so it wouldn't surprise to see the market bounce back, and we are set up with this doji type candle at the end of this downtrend, so a possible retracement back to higher levels. And as previously mentioned, first level of resistance is 124.55, and strong resistance around 125.86. The Tenkan-sen is trading around that level, and we know when we have strong downside momentum that that's the first area that the market tends to find strong resistance as, so that's a very important level there at 125.86. But basically a negative market which is no longer being supported by the sellers, potential for a change of trend in the first time frame.